Okay, hi everybody. It's Dale Jannels, one of the directors at Impact Specialist Finance, and with me today I've got Justin Cooper, who is the Senior Business Development Manager at Octane Capital. Welcome, Justin.
Hello, welcome.
So, we just want to give our audience a little bit of an insight as to your day-to-day runnings, what you do at Octane, and how basically you can help our audience.
Okay, all right. Well, as Octane Capital, as a brand, we launched in May 2017. The senior management team are the same senior management team that started up at probably one of the UK's biggest bridging lenders, that's now referred to as Octopus Real Estate. That was started up by our senior management team. And in May 2017, they started up Octane Capital. As a proposition, we wanted to try to launch with something completely different from the rest of the market. And we think we've done that in that we have a completely bespoke proposition that is built entirely around risk. The advantages to that are that we can price deals based on all their merits, not just loan to value, and the quality of the borrower, the quality of the security, and the exit associated to the deal. And it adds a great deal of flexibility. In particular, with packages, for example, with no fixed criteria on fees. So if the rate needs to be better, the fee can be split evenly between lender and packager, or if the fee needs to be higher because the packager has to share a larger proportion with his introducing broker, we can accommodate that too. There's nothing set in stone. It's completely flexible.
Okay. And what do you see the challenges in the current climates?
Well, of course, there's a lot of uncertainty in the market still, obviously brought on by Brexit, but as a lender, it doesn't seem to be negatively affecting us because we only launched in May 2 years ago. We launched right in the middle of the referendum, so we have no legacies. That's not affected us, but of course the uncertainty that it brings is people are holding back from buying. Some people are deciding that what they want to sell won't sell straight away. They're looking for longer terms. We're actually finding that a lot of the deals that we've written in the last 12 months are approaching end of the term, and the exit's not quite ready.
Okay.
And I think if you're with the wrong lender in that situation as a borrower, you could find yourself being quite heavily financially penalised. But we're proud to say that in the 2.5 years that we've been trading, we've found ourselves lending to repeat borrowers on multiple occasions, and I think that's because they like the way we work. We treat our borrowers the way we'd like to be treated ourselves, and we work with them as they approach their exit. And we look to sort of create further solutions for them to allow them, to accommodate these uncertain times in the market. And if something hasn't, originally they allowed 12 months to sell, and in 12 months it still hasn't sold, they want to add another 12 months, we look to do that.
The big myth with sort of the bridging side and whatever is that it's very expensive, but of course you can price per risk accordingly. So what sort of deals are out there to be had currently?
Okay, yeah. Well, look, it's a fair point, and I think when bridging started, it was horrendously expensive. But as bridging has evolved in the market, and it's become more transparent, that has been a good thing for borrowers in the sense that it's driven down the pricing. For example, at the moment, we have just announced a tranche of £20 million that we want to try to lend between now and the end of the year at our buy-to-let rate that is being used as a bridge. So there's an example where we're making money available to borrowers at a rate that is lower than normal, to give them an opportunity to try to carry out any transactions that they've perhaps been holding off on, with the added advantage of the pricing being cheaper than normal.
Okay. So finally, just what sort of advice can you give to a broker currently?
Well, I would say that it's important to look at all options available in the market. A lot of people are chasing gearing, except that higher leverage is very often a requirement that we see. As a lender, we still try to leverage at a level that we think is appropriate for the market conditions. And as you said earlier, we price, to risk. We take everything into consideration. Yeah. I would say that if a broker is looking at options for their clients in the current market conditions, they should look at, because it isn't always about just price, and it isn't always about just leverage, but it's a combination of everything.
Sure.
And I think they should look at carefully at what the borrower's plans are on exit, consider the lender that they're choosing and what options will be available if that borrower finds himself in a situation and their exit is delayed for whatever reason, and balance that with a fair price at a leverage that works well for the borrower, gives the borrower what they need, but is not, unnecessary in that perhaps in 12 months' time, if the market hasn't grown, but the borrower needs further options, and a higher leveraged loan day one might cause them more problems down the line than being able to put in as much as you can today.
Sure. And then last word from you, why would someone use Octane?
Well, I think people would use Octane because, as I said before, we treat our borrowers the way we like to be treated ourselves, and we take great pride in borrowers coming back to us through their brokers, of course, but on a repeat basis. And we do that because we treat our customers fairly. We're very easy to deal with. We use our credit managers, aren't underwriters, they are credit managers who deal with the case from cradle to grave. So they'll look after that borrower's loan all the way through application process, through completion, right through to redemption. And so that will give the broker an opportunity to maintain a high degree of continuity all the way through the life of that loan. And, we're still at a size that allows us to be very, very personable when we're dealing with our brokers and packages.
Sure, and we find that's a really, really good a good bit of experience to have, especially when you're in the office here at Impact Specialist Finance. So thank you very much for watching that. We'll have some more of these coming soon. In the meantime, please give us a call and have a chat.